One of my baby stocks from 2020 reported earnings today. Hello everyone, welcome back to the channel. Today we're gonna talk about a stock that I used to talk a lot about in 2020, and I have not posted a video yet this year, or maybe I posted one in March about this stock, and this stock is Lyft, ticker symbol LYFT. I used to talk about this stock a lot last year because I was investing a lot of money in this company, even though many did not used to like this investment. But still, they report earnings today. We're going to talk about their earnings, their report, their profitability, analyst expectations, and everything else. If you're new to my channel, please consider subscribing and smashing that like button since it really helps my channel out. Now let's go to my computer and check everything they reported today. Okay, so as we can see, the stock was down 1.11% today, but after they reported earnings, the stock went up 7.26% and then went back down. So it ended up 0.36% after hours. Now, why did this happen? We're gonna check it right now. As you can see, CNBC says Lyft revenue grows 125% from last year. Obviously, we gotta understand that Q2 2020 was when everything started and Lyft got really affected. Now, they were able to beat analyst expectations on loss per share of 5 cents versus 24 cents per share expected. Revenue 765 million versus 696 million expected, so they beat analyst expectations as well. Same with active riders, they reported 17.14 million versus 15.45 million expected. They missed analyst expectation in revenue per active rider. As you can see, they reported 44.63 versus 45.63 expected. Now, this is the best part from today. The company reported its first quarterly adjusted EBITDA profit, posting at $23.8 million. Why is this a big deal? Because we all have been keeping track of this company and Uber on their path to profitability. And last year and in 2019, they talked about achieving profitability by Q4 2021 or Q1 2022. But then last quarter, Lyft said that they were going to be able to achieve profitability by Q3 2021, but certainly they were able to achieve profitability in adjusted EBITDA today. So for Q2 2020, 1 quarter earlier than what they were expecting and that what analysts were expecting. And that's why the stock went up 7% after they reported earnings. Then obviously, this was a significant milestone for the business and for the industry. We're gonna wait and see what Uber has to say tomorrow. Or you're gonna be watching this video tomorrow. So what Uber is gonna say today after market closes, as they reported earnings today. Now, as you can see, their revenue jumped 125% year over year, but 26% from prior quarter, which is actually very nice because as you can see here, their revenue is actually on a constant growth. It's growing quarter over quarter and year over year until 2020. The pandemic happened, Q2 dropped massively, and it has been recovering very nice. So it grew 26% over what they did last quarter and 125 from what they did on Q2 2020, because obviously it was the worst quarter for them. In comparison to Uber, we can see that their revenue is all over the place, and I don't understand why, but year over year it obviously looks as an actual and nice growth. Obviously 2020 was not the best year, but quarter over quarter is not as perfect or as constant as Lyft. They did mention that they already saw strong demand from riders in July despite an increase in COVID cases, which is actually a nice thing to see because everyone were expecting everything to close or see lockdowns back again. Now, the company has struggled with driver supply and demand imbalances, leading to surge pricing and increased wait time. Because as you can see here, active riders were at 21.2 million in Q1 2020, but because of the pandemic, it dropped a lot. And it's back at 17.1 million active riders, but still it's not at what it used to be in Q1 2020 before the pandemic. But I think that they're almost getting back to normal. As you can see, it's growing quarter over quarter and year over year. So we just gotta wait and see how they do next quarter. Now, under earnings report, they had a great quarter. We beat our outlook across every metric, and we have growing momentum. We already knew that. Quarter 2 was truly exceptional. We grew active riders by 3.6 million from the prior quarter, which is what we were talking minutes ago. Lyft reported a revenue of 765 million, a net loss of $251.9 million versus net loss of $437 million, which obviously is a huge improvement, but we gotta understand that quarter 2 2020 was awful. Now, if we go and check their balance sheet, income statement, and everything, we can see that certainly they had a revenue of $765 million, which obviously is a huge increase year over year. But if we check the 6 month ended in June 30th, the growth was nice, not 125%, but still it was very nice for a stock company. 1.3 billion, all the way up from $1.2 billion. Now, something I liked as well was seeing how their gross margin was almost back to normal. As you can see here, they spent $346 million to make $765 million. That is a gross margin of let's see, 4,890 divided by... That is a gross margin of 56%, which obviously is way better than last year, as they had to spend $200 million to make 300. So that's a nice improvement. Obviously, their expenses also increased, but not that much. Their higher expense was actually research and development, and it's not that much growth in comparison to their revenue. Now, they did report a net loss of $251 million, but when they talk about their profitable adjusted EBITDA, it's because of this. So see how they reported $251.9 million in net loss, as I showed you before, but after interest expenses, other incomes, $34.75 million in depreciation and amortization, $201 million in stock-based compensation, and everything else, they were able to report a profitable adjusted EBITDA of $23.8 million, which is a 3.1 adjusted EBITDA margin. As you can see, only by taking out the $201 million in stock-based compensation, it's a big improvement. I do understand that it increased year over year, almost doubled, but still it's a nice improvement. I do want to see when they're gonna be profitable as a company and not as adjusted EBITDA. Now, their balance sheet is very nice. As you can see here, they have $484 million and $1.7 billion between cash and cash equivalents and short-term investments, which is a total current asset of $2.6 billion and total assets of $4.57 billion. Now, they had total current liabilities of $2.29 billion and total liabilities of $3.2 billion. They do have a long-term debt of $659 million, which slightly increased year over year. Since December 2020, but still is kind of nice. They have in total debt way less than what they have in short-term investments, so I'm not worried at all about this balance sheet. If we want to calculate the current ratio, we can see that they have 2,602,569 divided by 2,212. That's a 1.13 of current ratio, and it's actually pretty healthy in my opinion. Now, I do have to say that I know that I talked a lot about this company last year. I started investing back in February 2020 when the stock was at $45 per share, right before the pandemic started, and obviously it dropped so much that I was able to buy again at $22, $23 per share, $20 per share, doubling my position as I needed to average down. And because of that, I'm able to be up right now by almost 100% in this position, as the stock is at $55.60 per share. You can see here, I have a monthly series of stocks that I'm buying or looking to buy each month. And we can see that last year, this is a recap that I did on January 2021 from 2020. So I talked about it in March, then I talked about Lyft in May, back again in August, and back again in November. If you were to buy this stock between March, May, August, or November, you would have made about 80% of your money. And that's why we can see here that in March it was at $21, in May it was at $28, in August it was at $28, and lastly November was $37. So still November, that was the highest point, you would have made $47. So right now I'm very, very happy with this earning. I do want to wait and see what Uber has to say today, because they were also expecting to be profitable this year. So that's going to be huge today after market close. I'm not planning on selling this stock right now, maybe next year, but we gotta see. I do want to see what they're gonna do with the riders that they are short right now, because they talked about incentives that they're going to provide for new drivers to come in, which is good, but that actually will increase their expenses. So we're gonna wait and see next quarter how the profitability goes and how the revenue and growth goes. I do want to know if any of you invest in any of the stocks, either Lyft or Uber, what you think about it. I know that Tesla will have their robotaxi business, which is completely true, they will have it, but I believe that there is more than enough room for both companies, or the three companies, Uber, Tesla, and Lyft, to grow within the industry. I do understand that Uber is way more diversified as they are internationally, and they have Uber Eats and many other parent companies internationally, and Lyft is only in the US and Canada, but I do believe that Lyft still has a lot of room to grow and be able to be as what Uber is right now and go internationally. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Thank you, and see you next time.